The Fishy Assassination of Australia's Property Price Debate. Marcy North, John Adams, in the interest of the people. Hello, John.
Hi, sir. How you going?
Pretty good. So, a very interesting start of a conversation today about property price indices and what's really going on.
Yes. So we have been doing a lot of work off camera about property prices. A lot of stuff is happening in this space. We did a show about a month ago that talked about this property price fallacy, this dichotomy between core logic and REA that has blown up, that created a lot of controversy out in the market. So we've been looking further into this issue, and so we are ready to talk about some things today. There are some big things we may be saying soon, but we're not ready to say those things yet. But let's get into a very big, I think, controversy that we can reveal now, and we'll expand on this property story going forward over the next 4 to 8 weeks.
Yeah, and this is worth saying. This is probably one of the most important things that we've been covering, right? Because what people are thinking about the property sector is being informed by these various indices that are being thrown around and up in all the media, as we said the other time, yeah? And yet there are some interesting questions that should be asked about some of them.
Indeed. I mean, just to go back to our last show, we talked a lot about core logic, and there's a dispute about core logic's numbers. We also talked about how everyone uses core logic to report about what's happening with property prices, and that everyone is relying on one organization and one indice to basically come up with a perception of what's going on. And at that point, 4 weeks ago, there was a dispute about whether that perception was correct or not, and whether people were being misled either accidentally or on purpose for a whole host of commercial and political reasons. Where I think we should start this conversation is that since that show, I would say that the claims of a property price boom have just gone astronomically, off the Richter scale. The claims of a boom are becoming more outrageous. So I want to go through a few examples, and then we can go into the controversy of today's show. So, I mean, just to go back to core logic. So as of yesterday, so this is today's the 17th of November. So the 16th, taking from their website, let's put up on the screen. Core logic is saying that Sydney rose quarter by quarter by 6%, 6.03%. Melbourne by 5.91%. And today we'll just focus mainly on Sydney. So this is the key number. Core logic is saying over the last 3 months, prices went up 6% across the board. Houses, units, everything.
Well, it's the average. It's the average.
It is the average,
yeah.
Yes.
So just to be clear, that's an average for the entire Sydney region.
Yes.
Right? Now, occasionally they break it down into subsets, but that's just a headline number for the whole thing.
Yes. Now, one of the other things that Core Logic has been saying, which was picked up by the AFR, was that Melbourne prices in October, the month of October, rose by 2.3%, which was the strongest in 10 years. So I mean, this was reported on in the AFR on 1 November. So I just want to bring this up on the screen. So this is the article was a house price surge sparks rush to build. Quote: Melbourne house prices grew 2.3% in just 31 days, the fastest rate in 10 years, while Sydney was up 1.7% for the month, a clear indicator that the Reserve Bank's 3 rate cuts have motivated buyers and jacked up auction clearance rates. So obviously, so we've had some conference calls with some real estate agents in Melbourne, because if this is the hottest market in 10 years, real estate agents should be on the ground telling us whether that's the case or not. And we had a very lukewarm response from some real estate agents operating in certain suburbs in the outer east, in the north of Melbourne, who said that we can't see that this is the hottest market in 10 years. So you've got Core Logic, pushing strong propaganda out there with these numbers, and the AFR and others are pushing this narrative, in terms of going forward. We've also seen, a whole bunch of vested interests jumping on the bandwagon. We've seen signs up saying, house prices are up $100,000 in the course of 10 weeks. And obviously, there is a reinforcing narrative that's being pushed out there by people to say that the market is booming, things are fantastic, try to get in here. And I think psychologically, and it's interesting, you just released a show with Joseph Walker, and in that show you talk about the importance of psychology in the narrative. Well, the narrative is the fear of missing out. If you don't get in now, you're going to miss out, particularly first home buyers. And we're seeing a lot of evidence that first home buyers are out there to look, but whether they actually have the ability to get finance to close some of these deals. I mean, that's some of the feedback we're getting from some of the agents, that there's still an issue with finance, and the banks really haven't loosened up to the scale that they need to justify these house prices. Even though the ABS loan flow data is showing that there is a small rise in the rate of growth. So beyond that, we've also had a couple of guys, Switzer and Joy, talking about the fact that Christopher Joy is now saying that he believes house prices from here will go up 30%. So remember, only a couple of months ago when he debated Steve Keen, he said that after the second rate cut, his analysis said that prices will go up 5 to 10%. And now he's saying that we're headed towards a massive upswing with unconventional policy, QE, negative interest rates, etc. And property prices have 30% to run. And this was Christopher Joy, and so Peter Switzer on his website sort of talked about Christopher Joy's analysis. So obviously, a very big call, and people are out there saying that the market is booming, etc. And then obviously the big news that came out last week was Louis Christopher from SQM Research put out a 70-page report about his forecast for 2020, and he made the big call of Sydney going up 14% for the year, and Melbourne going up 15% for the year. So again, very, very bullish calls by SQM Research. And he gave a whole host of factors for why that's the case. Now, last week, Louis Christopher was on Peter Switzer's show to talk about his analysis, but also to comment about what's really happening with Sydney and Melbourne house prices. So let's actually play that clip, because I think that's quite informative.
All right, mate. So I want to talk to you about your forecast for 2020, right?
Yep, which we've just released.
Okay. Before we do that, I just want to kick off asking you, there's a bit of controversy around whether there really is a house price rebound. One analyst, well, the one that's quoted by everyone, says, yeah, a rebound's happening. Look at the numbers. Another one said, only a few suburbs, but not right across the board. You're a man who watches property 24/7. What's going on?
The Sydney and Melbourne housing markets are definitely on the rise, and they're rising at a considerable clip, Peter. So there is ample evidence of this market rise. For starters, auction clearance rates are well and truly higher than where they were this time last year, even after taking into account unreported results. Housing finance approvals are well and truly up, which is being reported by the ABS. Our asking prices index, or what vendors are doing, basically vendors have lifted their asking prices in Sydney by about 5% since the election, and Melbourne by about 6%. So vendors would not lift asking prices unless they were confident of obtaining a higher price. Then of course we have the CoreLogic numbers that have come through, which I know there's some dispute, but there's also the APM domain price series, which has also recorded some strong price rises for Sydney and Melbourne once again. So the evidence is ample, Peter. I would strongly dispute the notion that prices are somehow still falling or Sydney and Melbourne are still weak. They're not, they're rising, and it's critical that everyone does get the snapshot right, because if key authorities think the market's doing something else than what it actually is, wrong decisions will be made, especially around monetary policy and what potentially Australian Prudential Regulation Authority does.
Yeah, so you're worried that, well, if the wrong signals have been put out there, maybe the Reserve Bank will cut interest rates one more or two more times when they don't need to.
Correct.
And secondly, APRA might overreact, think, oh, there's going to be a massive boom, we need to get involved and kill the market off again like they did before.
It's critical that we get the here and now right, and I do appreciate that it's more difficult in housing to do that versus, say, the equities market, because we're not talking about standardised shares. We're talking about unique properties.
Yep.
It is more difficult to measure it, but nevertheless, when you consider the consensus, the overriding consensus indicators out there, the market in Sydney and Melbourne is well and truly up and accelerating.
Yeah, that's pretty clear, isn't it? And it's worth saying, I think, that he has a number of different scenarios that he works with, right? But he's talking about his central scenario here.
Yes. There were a few things that I think were important from what Louis Christopher said in that clip. One is he said that it's actually very important to get the right snapshot of the market, because if you get the wrong snapshot, you're going to get wrong public policy decisions.
Yep.
So I think that everyone agrees on that. But he did say that there is no question that Sydney and Melbourne are booming. So he said any notion that it's falling or weak, let's throw that out of hand. And you know, on the scale from the bulls to the bears, he tends to be one of the biggest bulls in the market. But also he said that, you know, the overwhelming consensus is that this is a booming market. And who has driven that overwhelming consensus? It's called logic. So it's going back to the thing that we said in our last show when we had Edwin about the whole market psychology is being driven by one hedonic index, one organisation, and if that's wrong, the whole market is wrong.
Sure. And it's self-perpetuating as well, isn't it? Because more people say it, therefore more people believe it, therefore more people say it. So never mind what the data is really saying. That's perception becomes reality.
Yes, and one thing I will say is, so beyond our conference calls with real estate agents in Melbourne, I have spoken to a couple of real estate agents in Sydney besides Edwin.
Yep.
And one of the things that has come to me is real estate agents are saying to me that market behaviour is now changing on the basis of the propaganda. So for example, you know, the way this should work is people in the market make decisions that you see these changes in price rises if the market is rising, and then you get the reported data, and that's how it goes. That should how it work. What some real estate agents who I'm talking to in, say, Southwest Sydney, who are sceptical about all of this, about Sydney house prices rising by 6% across the board, they're saying that some of these buyers were pessimistic. And now, because of hearing on the news and through all these various channels, they are now becoming optimistic, and now they are wanting to either buy more property or to speculate on property based on the change in perception, and that change in perception was driven by this integrated network of propaganda that we talked about in the last show.
Yeah, just to give you a further example of that, I was talking to somebody actually locally here, so, you know, close to Wollongong, and they were saying prices in Wollongong are also up by 6%, right? Because what they've done is cross-read Sydney to include Sydney and the whole greater Sydney region and down to Wollongong.
Right.
So I had to say to them, well, actually, if you look carefully, Wollongong prices are down about 7.5%, and there's no evidence at all of anything moving up at the moment. So it just shows you how a high-level figure thrown out there can stick.
Yes. Now, to move the conversation forward, so obviously in our last show, we played Nerida Consby from REA and what she said to you on the 1st of October when you released your show on in terms of DFA. And so basically 6 weeks ago, so this is the middle of November, 6 weeks ago, she said the city market was still falling. So now she's in the market saying something new. So before we get to her new claims, let's actually rehash or replay her comments to you back on the 1st of October.
We are able to get more up-to-date market statistics, primarily because we rely on the value of general data, which tends to be about 3 months old, but we also add in all the sales data that we get on site to give us a little bit more of an up-to-date representation of the market.
Okay, so that sales data interests me because obviously with the low volumes that are currently going through in terms of, you know, auction clearance rates and transaction throughput, the price data appears to be quite strong. I guess my question is that true, or is it actually a function of the more limited volumes and therefore the limited data streams that are coming through?
Oh, absolutely. The volumes has a lot to do with that at the moment. I mean, we're not seeing growth in Melbourne and Sydney as yet. So I think some forecast or some creators of indices that are seeing strong growth in Melbourne and Sydney at the moment. We're not. We are still seeing price declines, but we are seeing some suburbs do very, very well. And the suburbs that are doing well tend to be premium suburbs. It's premium Sydney in particular. We are seeing strong growth in places like Vaucluse and Collaroy and Rose Bay, for example. Some strong growth in Gold Coast premium, so which I think is related to Sydney money. We can certainly see search moving from Sydney up to the Gold Coast. So premium markets are doing pretty well. It is pretty. Auction clearance rates, that's another one that tends to be a little bit misleading, because if you have a look at auction numbers and where auctions take place, they are mainly in Sydney and Melbourne, and they're mainly Sydney and Melbourne premium. So, we've got these very high auction clearance rates, but at the same time, if you have a look at a market like Sydney, listing volumes are down 25% compared to the same time last year. So there's a distinct lack of property on the market, which, is one of the key drivers of price growth.
Yeah, absolutely. And I think that's very interesting because, of course, the media has been really fixated on the property price movements up in Sydney and Melbourne. The property price indicates that the markets are absolutely bouncing back and this is the great time to buy. I've said, I think there's another side to the story. And it sounds to me as though you've got a much more balanced view as to what's really going on at the moment.
Yeah, look, I think the point is that, when we have a look, when we talk about a downturn in Australia, it was Sydney and Melbourne. If you look at markets like Hobart and Geelong, they've seen some of the strongest growth they've seen in decades. So, the market downturn was finance-led. It hit Melbourne and Sydney very hard. Finance restrictions are slowly easing up. Interest rates have come down. We've had a change of government. And we can actually, I'm saying this because theoretically I think that's what happened, but we actually saw it in search that the end of the federal election result led to a jump in search in Melbourne and Sydney. It didn't lead to a jump in search anywhere else. The same thing with the interest rate cuts. They led to a jump in Melbourne and Sydney, but they haven't led to a jump anywhere else. So it is, we do talk a lot about national downturns and we talk about, the Australian market as a whole, but the reality is that, while Hobart was roaring ahead and seeing its strongest conditions ever, Sydney was seeing this, quite sharp downturn that was creating a lot of problems for people in Sydney.
Right, and I think that's very important to understand, right? Because I've continued to say that we need to get granular to really understand what's going on. And my survey data indicates, there are some significant hotspots where prices are up, and you say, I agree, top end of the market. But if you look over in the western suburbs, if you look on the new estates that are being built and those sorts of things, seems to be a very different story there. And if you look in the high-rise sector, that looks pretty wobbly too, doesn't it?
Yeah, look, the high-rise sector in Sydney is it's very tough. When we talk about somewhere like Parramatta at the moment in terms of rental demand, views per listing, it's actually one of the lowest in Australia. So, there's not only a problem with quality, which needs to be resolved pretty quickly, I think, for the development industry, but, we also have problems that, on one hand, you may have a quality issue in your tower, but you're probably struggling to find a tenant, not because of the quality, but just because there's just so much stock available. So, I think you're right. Like, I think, house and land is one of those parts of the market that people generally can't expect to see strong price growth over the short term. I think anytime you buy brand new, it's like buying a brand new car, that it's, it depreciates quite quickly, and a car never really appreciates unless you keep it for, say, 30, 40 years. But, with housing, it's always a long-term gain. It's not a sector that does well trying to buy and sell quickly, no matter what you buy. But I think for brand new properties, it does take a while to see some pretty decent capital growth.
So 6 weeks ago, she said the market is falling. Now she has come out in the last few days and put out a video that's been reported quite widely now. And she's basically said, no, over the quarter, Sydney house prices or Sydney property prices have risen by 0.8.
Fifth point, which is the most solid evidence of a recovery and the fact that buyers are back, is that prices have now increased by 0.8% over the quarter across Sydney.
Now, CoreLogic says 6. 6 weeks ago, REA said falling. Now they're saying it's up by 0.8. Now, there are some questions about this 0.8 that I have in my mind, and we'll get to some of the factors around this. But when this claim has been made in the last few days that now the market is rising by 0.8, what wasn't said is, well, what is the quarter? Is it July to September? Is it August to October? Is it mid-August to mid-November? So that wasn't defined. The geographical area, that wasn't defined. And what I find quite skeptical about this new claim is the REA does not provide a whole of market hedonic number, and now they have come out with a claim to say that the market has risen by a specific number. And so we're about to reveal the details to why I think this is quite significant, as to they've come out with a number which is positive, but they're now saying that the market is moving up.
Yeah, and John, it's also worth saying I don't really define Sydney, what's the geographic area.
That's right.
And neither is it clear whether it's houses or units and houses or what the mix is, right?
Yes.
So it's just a very high level headline number.
Yes. So the new narrative from REA is the market is up, and the market is up by 0.8.
Yep.
So there's still a very big gap. And remember, Louis Christopher said there can be no question that the market is booming. Any notion that the market is weak or falling is completely bogus. So there's still a dispute about, because between 6% and 0.8, that's a big deal. But we'll get into why I think there's a question about the 0.8. So that's the new claim. Now, one of the new pieces of analysis we're going to reveal on the show is, so Lindsay David from LF Economics spent some time last week and over the weekend where he went using the REA website and going suburb.
Well, it's actually realestate.com.au website, just to be really clear.
Sure,
Yep.
realestate.com.au.
Yep.
So he went on that website and he went through suburb by suburb right across Sydney to figure out whether, according to realestate.com.au's data, whether the market is going up or whether it's going down. And he actually had some very interesting numbers in what he came up with. Now, we're going to put a graph up on the screen, but basically, according to the graph, what Lindsay found was that there was 315 suburbs in Sydney which are falling, 45 suburbs where the market did not move, and 110 suburbs where the prices were rising. So this is a period between July of 2019 to October 2019. So a 4-month period. But a lot of the dispute that has been conjured up has been, because remember, narrative said effectively between July and September. That because she interviewed you on the 1st of October, the market was still falling, and so and obviously now CoreLogic is saying that over the last between July and sort of now, it's 6% is quite strong.
When I had spoken to Nerida at the beginning of October, I did a somewhat similar review of the realestate.com.au data, and I found somewhat similar things too. That there were some suburbs where prices were rising, but there were more suburbs where prices weren't rising across Sydney. And there was quite a lot of variability. Some of the more expensive ones were moving up, some of the cheaper ones were definitely not moving up. So
indeed, and the other interesting thing was that from that table from that graph we have a table. So let's put the table up on the screen. So one of the key things that I sort of take from that table is you have a very large number of suburbs that are still falling. Anywhere but 72 suburbs between 0 and 1%, 69 suburbs between 1 and 2%, 58 between 2 and 3%, and you still have some suburbs in this period, more than about 100 suburbs which have fallen more than 3% over that period. So you still have a big bulk of properties that are still falling by quite a bit. And the other thing actually we didn't mention, and this is critical, is Lindsay just looked at houses.
Yep.
He did not look at units. And what we can say to be quite confident is that the unit market would be weaker than the housing market because of the building construction issues, particularly with the new supply. And so confidence has been smashed with that. And I think you've said in a previous show that there has been a shift in market attitudes towards houses because people don't trust in terms of what they're buying. So if people are buying less units, or there's less demand or interest in units, and people are shifting to houses, well, according to realestate.com.au's data, which Lindsay went through, more than 3 times the number of suburbs are still falling over this 4-month period as opposed to rising. And this is where some of my skepticism of this 0.8 figure comes into question.
Yeah, well, it's certainly more in line with what I think was certainly happening a few weeks ago. And it's worth just saying on the unit end of things, we know that there are quite a few property investors still trying to sell units at the moment, particularly where they bought in these new high-rises over 2 or 3 years, and now they're worried about cracks, flammable crack cladding and all those things, and the fact that the rental returns on units are pretty low. So there's definitely a different market for units relative to houses. There's a lot more demand for houses, particularly close into the major centres. And so it's quite an interesting dynamic. But even houses, what we're saying is there are more still falling, more postcodes falling relative to those rising.
Yes, and somehow we have a 0.8.
Yeah.
Now, let's get into the real controversy of today's show. What we know is that a lot of so remember, there is a lot of money on the table. There is a lot of vested interests who need the market to go up. From the property sector to the banks, to media who relies on real estate advertising, to the government, to the RBA, etc. So after our show, now it's on YouTube, 60,000 views. It got a lot of attention from certain people in the market. There was what we can say is enormous industry pressure placed on REA because of our show and because we replayed the comments of the chief economist. Now,
and it's worth saying that, of course, Nerida said similar things on Switch's show as well, right?
Correct.
So it wasn't just our show was out on a limb. She did actually confirm it subsequently.
Yes. Now, before we... So because of this pressure, we have seen some new behaviour from REA. Now, before we get into the chief economist, let's talk about the CEO of REA. So the CEO is Owen Wilson. He gave an interview on the 8th of November and reported by the Sydney Morning Herald, in which he made a very interesting statement that really caught my attention. And let's put it up on the screen. So this is REA saying, quote, "The buyers are absolutely back," Mr. Wilson said. "We've clearly bottomed on house prices after 4 months in a row of increasing house prices." So after our show, after some controversy that was created around REA, massive pressure was placed upon this company. And we'll get into some of this in a second. And then the CEO goes on the public record with the Sydney Morning Herald and says a statement which is in contradiction to his own firm's data. So I read this and I'm thinking, but hang on, this is when I first saw this in the Sydney Morning Herald. I was saying, but his own chief economist didn't say this. His chief economist said something completely different. So I don't know whether he misspoke but clearly he said something that was factually incorrect on the record.
Well, there's 2 points there to make. One is he was talking in the context of the results of REA that came out at the same time, and he said that it had been a really, really bad year for property, and he said he's never seen it so bad, right? And then he said, but it's suddenly improving, right? And prices have gone up for the last 4 months.
Yes.
Right? It's not being shown in as we showed from Lindsay's analysis, it's not being shown in the data.
Yes, and his own firm's data.
Yes.
Yeah. So we have a CEO who said something that was pro property, pro what the spruikers want, but his own firm's data doesn't support that.
Yep.
So we have that now. After the show in which we done with Edwin, but Edwin himself went on Twitter. So this was tweeted on the 1st of November, a couple of weeks ago. Edwin said, "It's alleged that Nerida Consby from REA has been shut down for defending the truth, re property data, and how the hedonic daily index is misleading at best. I have heard this from 3 sources, and it wouldn't surprise me if Nereda's job is on the line. So that's Edwin's claim. Now, I have spoken to Edwin. I have my own sort of channels in the market as well. And so it's clear that certain people in the market were unhappy with this counter narrative, what I would call. So, the whole society was running on a narrative that was being pushed by CoreLogic. Everyone was trying to say the market is back, get it back into the market, huge vested interest on the line. She gave 2 interviews where she said, no, the market is still falling, and this was 6 weeks ago. And people in the industry were not happy with her comments, and there was pressure placed on REA and her employer to basically quash any commentary that the market is still falling.
Sure. Yeah, and we don't know, of course, the precise details, but there has been enough points of indication to suggest that there was a definitely change in the atmosphere with regard to REA and what they're prepared to say about the market.
Indeed. And so one of the other reasons why I'm skeptical about this 0.8 is the 0.8 was made after pressure was applied for them to stop saying the market was falling. So that is something that people have to sort of place in context. So what I want to sort of bring in terms of summary, in terms of this conversation. So there's probably 5 takeaways that the people should walk away with. The claims that the market, Sydney, Melbourne, are booming. I mean, these claims are getting louder. They're becoming more outrageous. We're hearing 30% price rises in the next cycle. We're hearing 14-15% for 2020. Everyone's saying, now is the time to get in. Otherwise, you're going to miss out. So that's point number 1. Point number 2 is the richest data set in the country, which is realestate.com.au, is effectively saying for 4 months, July to October, and then again, this is where in mid-November, 3 times the number of suburbs says the houses are still falling compared to rising, which is completely against the narrative. So that's point number 2. And the other point is that if we even accept the new claim by REA, they say 0.8 for the quarter. CoreLogic is saying 6. Big difference there. We have the CEO of REA, after market pressure was applied on that company, he came out and said that prices are rising for 4 months straight. And he said something completely in contradiction to his own firm's data. And now we have the chief economist saying that, again, the market is up 0.8, even though that on houses, her data is saying, no, 3 times the number of suburbs are still falling than rising. And if we even consider units are going to be much weaker than houses. So one has to question, where does this 0.8 come from? And again, like with anyone in this market, if you're going to put a number out there, you have to justify how they came to the 0.8. And if REA wants to now say this is precisely how we come up with the 0.8, I would welcome that detailed explanation. And I think Louis Christopher on Twitter yesterday, he called on REA to release a methodology paper to explain how do you come up with a number when you don't come up with high level numbers in the first place.
Yeah, and so standing back, is it 6% or is it 0.8? That's the first question. And what that really does, it questions the narrative everyone's been propagating.
That's right.
And secondly, it also questions some of the dynamics in the industry and some of the influencing going on in the industry.
Yes.
Right? And people should realise that these indices are actually being created by commercial firms with commercial interests. They're not official figures, right? And therefore, they should be taken with an appropriate degree of scepticism.
Indeed. Although in the last show, we said the official figures are based on these commercial numbers.
Well, indeed, yes. That's another little twist, which perhaps we'll come back to in a later conversation.
Yes. Yeah. So I mean, what I take from this is that there's a pattern of very unusual and fishy behaviour that we're seeing across the market. It seems to me that the establishment has sought to kill the counter narrative that the market is falling. And so we think there is something quite significant happening. So we can't say everything that we're looking at yet, But I always say to the audience, stay tuned. We have more big news to reveal on this in the weeks to come.
And what we can say is it does smell extremely fishy.
Absolutely.
John, appreciate your time today.
Thank you.
Martin North, John Adams, in the interest of people. We'll see you next time.